Well, hello and welcome to Financial Markets Insights. My name is Mike O'Hara and I'm here today with Ash Gawthorpe, who is the Technical Director of the Test People. Welcome.
That's right. Thank you.
Now, we're here today to talk about mobile trading technology, and the Test People recently performed a fairly extensive survey into the use of mobile trading apps. So maybe we can start with asking you what you were investigating and why.
So essentially, we were looking at different mobile trading applications, and specifically what that user experience looked like from around the world. Obviously, if you have somebody who is based in London or based in New York, there are fast internet connections in place. You're closer to the source data center that the data is served from. The user experience that you get there is significantly different to that which you get if you're in China or you're in Indonesia, or if you're in Australia, for instance. So it was really focused around what that user experience looks like from the different geolocations.
And what were some of the key findings that you came across in terms of how that user experience differed?
So I think broadly, as you might expect, what we found overall was that users who were based further away from the source data center, generally it took longer for the application to load, to become responsive, also to open positions, close positions, and to see price updates. But at the same time, there were some interesting anomalies in that if an application was written well and it was performing well, then an application running from China could outstrip the performance of an application which was running a lot closer to that source data center.
That's a really interesting finding, isn't it? Because obviously with any trading application, latency is a key factor. And with some of these locations being quite distant from where the actual the matching engine, if you like, is located. What were some of the kind of the key aspects of how that latency could be managed or kept to a minimum?
Mm-hmm. So I think actually on that point around latency, there was a very interesting fact which came out around the use of networks around the world. So in the developing world, what we found is that people were actually using mobile data communications, not just for mobile devices, but also for desktop devices. In a lot of locations, wired broadband wasn't sufficiently prevalent or was prohibitively expensive, which meant it was actually cheaper for people to use mobile data connected to a laptop or a desktop machine in order to use the application. That then compounds the problem. So you haven't just got the latency based on the fact that you're further away from the location, you've also got the increased latency of a mobile network to consider. So the time to get to the base station, the time from the base station back to the infrastructure for the internet, and then actually back to the data center as well.
Because it's interesting, with any trading application, they're using a lot of data, and I guess how that data is delivered and how it's handled could probably plays a big impact on how performant the apps are as well.
Yeah, absolutely. I mean, there were completely different forms of messaging in order to supply that data. So at one end of the scale, you had very optimized binary messaging protocols that were pushing the data to the client. At the other end of the spectrum, you had poll requests, which were being done over HTTP, sometimes with very large headers, which can't be compressed, which means that you're then taking a double hit there, because before you can get the price back, the request from the client has to be uploaded, received by the server, and then sent back again. I mean, we saw differences in terms of 2 orders of magnitude between the efficiency of an application that was using a good sort of tight binary protocol in order to deliver that mechanism, and something that was using a very sort of fat and verbose SOAP message over HTTP, for instance.
That must play a big impact as well on usage charges, because I guess in the developing world, a lot of people have these kind of fixed monthly contracts in terms of how much data they can use, and they can very quickly get to that limit if the application is written badly.
Absolutely, I think that's a very interesting point. So if somebody is in the developing world and they have a capped usage on their broadband connection, if they're using a mobile device, for instance, you've got 2 problems. One, it's more expensive relative to income per capita anyway, so it's quite expensive. And if the platform is actually burning its way through that data, just delivering prices, then I can see how that would really impact the customer experience, and they'd possibly look at a vendor who was optimizing that technology and making their money last, making their credits last longer, essentially.
Okay, so just to wrap up, could you maybe summarise what you see as some of the best practices in terms of developing and delivering these mobile trading apps?
Sure. So I think the key points are that there isn't a silver bullet. There are things that you can do which will improve the performance of the application, but it needs to be considered holistically. So you have the client-side application, the server-side application and its respective services, the way that the application is deployed, and the infrastructure that it's running over. Some of those, as the application vendor, you have a lot of control over, such as the client and server-side technology. Some of it you have very little control over, such as the infrastructure that the user's coming in on. If they're using a mobile broadband connection from halfway around the world, you can't reduce that latency. And some of them are somewhere in between. So there are steps you can take in terms of the deployment architecture, in terms of CDNs, in terms of enterprise messaging solutions, ultimately getting that data closer to the user, and it's that which will improve performance for end users. There are also things that you can do within the development and test process to ensure that you set targets in terms of what the performance should be, and that you design those targets in from the beginning, that you ensure the architecture is as optimal as it can be, and finally, that you regularly perform performance tests on that system from either infrastructure, from around the world, from the different geolocations, or alternatively simulate what that looks like in terms of connectivity. That way then you're ensuring that you're not introducing any regressions.
Well, Ash Gawthorpe, thank you very much for sharing that with us today. Thank you.
Thank you.